Okay, hello everyone. Hi guys. Good noon everyone. How are you all? Good noon everyone. So I welcome you all in today's session. So today we have to complete IEFS module D everyone. So everyone who is watching this video, kindly just please like and share the video to the maximum you can. And let's start discussing this module D marathon for IEIFS. Okay, so let's start discussing. First of all, let's talk about the first question. And the first question is, consider following statement regarding the debt market. Okay, so we have two statement written. We have to choose the incorrect statement regarding the debt market. First, the debt market consists largely of the government securities and to a smaller extent corporate bonds. Second, company raise funds for longer periods, say 5 years or 10 years, through issue of a typical long-term debt instruments known as corporate bond. Now we have to choose the incorrect statement here. Everyone, please answer this question. Everyone, kindly please answer this question. We have to choose the incorrect statement here. We have to choose the incorrect statement. Everyone, the debt market, we have to choose the statement regarding the incorrect statement regarding the debt market. Everyone, kindly please answer this question. So the correct answer is what? Okay. So if we talk about the correct answer, the debt market consists largely of government securities and to a smaller extent corporate bonds. Yes, it is a correct statement. Nothing is wrong in the first statement. Second, companies raise funds for longer period of time, typically 5 years to 10 years, through the issue of long-term debt instruments, which is called as the corporate bond. So that is also correct. So neither one nor two is the correct statement. So D incorrect statement. So D is the correct answer. Because both the statements are correct, we have to choose the incorrect statement. Everyone understand and read out the question carefully. You have to correct this correct. Choose the correct statements about the derivative. Now you have to choose the correct statement regarding the derivative. The term derivative refers to a type of financial contract whose value is dependent on underlying asset, group of assets or benchmark. Second, in India, different derivative instruments are permitted and regulated by SEBI only, Securities and Exchange Board of India only. Now we have to choose the correct statement here. Everyone, kindly please answer this question. We have to choose the correct statement here. Everyone. So the correct answer is what? Everyone, please answer this question and kindly please like and share the video to the maximum you can. Everyone. We have to choose the correct statements about the derivatives. Everyone, choose the correct statements about the derivative. Everyone, please answer. Okay, so when we are talking about the correct answer, the first statement, the term derivative refers to a type of financial contract whose value is dependent upon the underlying asset, group of assets, or benchmark. That is the correct thing. Nothing is wrong in the first statement. Second, in India, different derivative instruments are permitted and regulated by SEBI only. That is wrong. So we have FIMTA also, Fixed Income Money Market and Derivative Association of India. So FIMTA is also there for regulating the derivatives market in India. Yes, it is regulated by SEBI. Also, it is regulated by Reserve Bank of India. Also, it is regulated by FIMTA also, right? So the correct answer for this is only first is the correct statement, second is the wrong statement. Why it is wrong statement? Because the word only is added. Okay, if the word only is not added, then it would be the correct answer. But it is not only regulated by SEBI, it is regulated by SEBI also, FIMDA also, RBI also, right? So it's the correct answer, everyone. Now next, state development loans are instruments in which of the following market? State development loans, these are the instruments in which of the following market? Money market, credit market, debt market, and derivative market. So tell me the correct answer, everyone. State development loans, these are the instrument in which of the following market? So tell me the correct answer, everyone. Very easy, very simple question. This is the simple question. Everyone, please answer this question. Yes. Good, Ame. So state development loans, these are the instrument in which of the following market? So these are the instruments of the debt market. Okay. Now just tell me, money market is regulated by whom? Money market is regulated by whom? You can all answer this question, everyone. So money market is regulated by whom? Everyone, kindly please like and share the video to the maximum you can. And if you haven't subscribed this channel yet, please subscribe this channel and press the bell notification icon, everyone. So when we are talking about the state development loans, these are the instrument of the debt market. Perfectly correct. But tell me who is regulating the money market in India? Money market is actually regulated by whom in India? So when we are talking about the money market is regulated by the Reserve Bank of India. And in money market, always the financial instrument which have a maturity period of less than 1 year are dealt. Okay. Next, choose the correct statement here. Now again, we have to choose the correct statement. First, the call notice term money is a market for trading very short term liquid financial assets that are readily convertible into cash at low cost. Now, second, the period of lending may be for a period of 1 day, which is known as notice money, 2 to 14 days, which is known as term money. And if we talk about the notice money, it refers to the borrowings of the fund for a period of 14 days up to 1 year. So tell me the correct answer. We have to choose the correct statement here. Everyone, kindly please answer this question. We have to choose the correct statement here. Simple thing. So term money, notice money, and the we have to talk about the term money, call money, and the notice money. So the time period related to the term money, call money, and the notice money that we have to discuss. Everyone, please answer this question. So the correct answer is what? Everyone, please answer. The correct answer is what? First, the call, notice, and term money. Okay. These are the short term liquid financial assets that are readily convertible into cash at low cost, right? Now, next, when we are talking about the period of lending, so the period of lending, if the period of lending is for 1 day, then it is actually called as call money. 1 day is call money, 2 to 14 days it is notice money, and more than 14 days up to 1 year is term money, right? So call means up to 1 year, so it is called as call money. Then between 2 to 14 days it is called as notice money. And then if it is lending for a period of more than 1 year, sorry, more than 14 days and up to 1 year, then it is called as the term money. So obviously only first is the correct answer, second is the wrong. So first only is the correct statement. Right, everyone? Done? Clear? Yes or no? Everyone, please tell me yes or no the correct answer. No doubt? Good. Next question. Treasury bills in India generally do not come under which of the following maturity period? Treasury bill 91, 182, 273, or 364 days. Treasury bill in India generally doesn't come under which of the following maturity period? Everyone, please answer. So the correct answer is what? Treasury bill generally doesn't come under which of the following maturity period? 91, 182, 273 or 364 days. So the correct answer is what? Everyone. So if we talk about the correct answer, the treasury bills, these are coming either in 91 days, 182 days or 364 days, not 273 days. So C is the correct answer. So treasury bill is issued either for 91, 182 or 364 days. Clear? Done? Now next. Eligible issuers whose total CP issuance, commercial paper issuance during a calendar is dash or more, shall obtain the credit rating from the issuance of the commercial paper from at least two credit rating agencies registered with SEBI and should adopt the lower of two rating. Everyone, please answer. You have to fill in the blank here. So, if you are the eligible issuer and you have issued the commercial paper of more than how much, then you should obtain the ratings from at least two credit rating agencies and you have to adopt the lower of two. So, the correct answer is what? Everyone. Correct, everyone. The correct answer is what? Eligible issuers whose total commercial paper issuance during a calendar year is dash or more shall obtain a credit rating from the issuance of the commercial paper from at least two credit rating agencies registered with SEBI and should adopt the lower of the two. So, if we talk about the correct answer, it is 1000 crore, not 100 crore. 1000 crore, A is the correct answer. Okay, next. The eligibility criteria of the tri-party agent is or are. What are the eligibility criteria for a tri-party agent? All the tri-party agents should need a authorization from the SEBI. The applicant should have a minimum paid up capital of rupees 5 crore. The applicant should have the experience of at least 10 years in the financial sector in India or abroad. Tri-party agent. What are the eligibilities of the tri-party agent? Everyone, please answer this question. Everyone, please answer this question. The eligibility of the tri-party agent. Everyone. What are the eligibility of a tri-party agent? First of all, a tri-party agent need the authorization from SEBI. That is wrong. You need to have a authorization from Reserve Bank of India, not SEBI. Okay. Second, the applicant should have a minimum paid up capital share of rupees 5 crore. Wrong. That is rupees 25 crore. Third, the applicant should have a experience of at least 10 years. No, they should have an experience of at least 5 years. So all the three statements are wrong. We have to choose the correct statement. None of the above is the correct statement here because all the statements are wrong. So all the tri-party agent they need to have a approval from RBI. The applicant should have a minimum paid up capital of rupees 25 crore and the applicant should have the past experience of at least 5 years in the financial sector. Clear? Done? Now next. Choose the correct statement. First, equity shareholders do not have any voting rights while preference shareholder have the voting rights. Second, equity shareholder have the right to participate in the management decision while preference shareholders don't have this right. So you have to select the correct statement. Everyone, guys. You have to choose the correct statement. Everyone. Equity shareholder do not have any voting right While preference shareholder have the voting right. Second, equity shareholder have the right to participate in the management decision, while preference shareholder don't have this right. Choose the correct statement, everyone. Vikram and Abe and everyone who is watching this session, kindly answer. Everyone, please answer this question. So the correct answer is what? First of all, equity shareholder do not have the voting right. False. They have the voting right, while preference shareholder don't have the voting right. Okay. Equity shareholder have the right to participate in the management decision, right? Preference shareholder don't have this right, right? So if we choose the correct statement, second only is the correct answer. First is the wrong statement. Clear? Done. Okay. Next. What is the minimum net worth required for a corporate to issue certificate of deposit? What is the minimum net worth which are required for a corporate to issue what? To issue a certificate of deposit. 1 crore, 5 crore, 4 crore, or no minimum net worth which is required. Everyone, please answer. Everyone, guys, please answer this question. Okay. So, minimum net worth required for a corporate to issue a certificate of deposit, no minimum net worth is required. No 1 crore, no 5 crore, no 4 crore. There is no minimum net worth which is required for a corporate to issue a certificate of deposit. Next, choose the correct statement. Now we have to choose the correct statement. The first, government securities or the government securities market consists of the securities issued by central government only. Second, bank shares in the total holdings for the government securities have increased while those of insurance companies and NRIs have decreased. Third, the government securities are highly liquid instruments which are available in the secondary market only. So you have to choose the correct statement here, everyone. Now choose the correct statement here, everyone. Please answer. Very simple. You can all answer this question. Choose the correct statement, everyone, and then answer. Okay, now, so if we talk about the first statement, the government securities market consists of the securities issued by the central government only. No, it has central as well as state government also, right? Then bank shares in the total holdings for the government securities has increased. No, it has been decreased over the past few years. While those of the insurance companies and NRIs, these have increased. Still, bank remain the largest shareholders in the government securities. That is the different fact. But if we talk about the holdings, the bank shares, these have decreased, whereas the insurance companies and NRIs investments have increased. Second, government securities are highly liquid instrument available in the secondary market only. False. It is available in primary as well as secondary market also. So we have to choose the correct statement here. None of the above are the correct statement. Okay. Next. Derivative trading commenced in India in June 2000 after SEBI granted the approval to this effect in May 2001 based on the recommendation of whom? Malhotra Committee, LC Gupta Committee, Lal Committee, NC Roy Committee. Everyone. Please answer this question, guys. Everyone, please answer this question. Derivatives. These have been started by the recommendation of which committee? Again, an important question. These are started by the recommendation of which committee? Yes, it was LC Gupta committee, right? So B is the correct answer. Next, what are the important parameters for any bond? Face value, maturity, coupon interest rate, or all of the above? What are the important parameters of the bond? Everyone, what are the important parameters of the bond? You have to answer this question. Important parameters of the bond, everyone. What are the important parameters of the bonds? So, for a bond, if you are going to invest in any bond, what are the things you are looking for? First of all, the face value, the value which you are giving for purchasing that bond. Second, the maturity time period. For what time period you are purchasing that bond? Coupon interest rate. Now, coupon interest rate means the fixed income you are earning from that bond for holding that bond till maturity. So, all of the above is the correct answer. Face value, maturity, and coupon interest rate. Clear? Done? Now, next. Which of the following bond theorems is not correct? Which of the following bond theorem is not correct? First, the price of the bond is inversely related to the change in the interest rate. Second, the increase in the price of the bond when interest rate goes down by a certain percentage is greater than the decrease in its price when the interest rate goes up by the same percentage. Longer the maturity, lower will be its price sensitivity. And between two bonds, if they have the same maturity but a different coupon, the bond with the lower coupon will be more price sensitive than the higher coupon. Everyone, please answer. Not correct. We have to choose the incorrect bond theorem here. We have to choose the incorrect bond theorem here. Everyone. Incorrect bond theorem. Everyone, please answer. What are the incorrect bond theorem? Everyone, you just please answer this question, guys. Okay, so first, the price of the bond is inversely related to the change in interest rate. True. The increase in the price of the bond when interest rate goes down is always greater than the decrease in the price when the interest rate goes up by same percentage. Correct. Longer the term of the maturity, lower will be its price sensitivity. No, longer the maturity, higher will be its price sensitivity. Fourth, if there are two bonds and they have the similar maturity but different coupon, lower the coupon, higher will be the price sensitivity. That is correct. So if we have to choose the incorrect statement, C is the incorrect statement. Clear? Done? Not D, Vikram. C. Clear? Now, next, we have to choose the incorrect statement about the primary dealers. Now we have to choose the incorrect statement regarding the primary dealer. Primary dealers are the entities which are registered with RBI who have the license to purchase and sell the government securities. These are the entities who buy government securities directly from the government with the aim to resell them in the market. Primary dealer system, this has been introduced by RBI in year 2000. So we have to choose here the incorrect statement. What are the incorrect statements here? Everyone, what are the incorrect statement? You have to choose the incorrect statement. Carefully look and then answer. Everyone, please answer this question. Coupon interest means half yearly. No, coupon interest means the fixed interest rate you are receiving for holding the bond till maturity. It can be on the yearly basis, it can be for the half yearly basis. Both the can be the answer. Okay. Now, we have to choose the incorrect statement regarding the primary dealer. First, these are registered with RBI. So that is correct. They have a license to purchase and sell the government securities. Now, second, these are those entities who buy government securities directly from the government. No, they actually buy government securities directly from RBI with the aim to resell them in the market. The primary dealer system, this has been introduced by Reserve Bank of India in year 1995. So we have to choose the correct statements. So only one is the correct answer. Second and third is the incorrect, are the incorrect statement. So we have to choose the incorrect one. So B is the correct answer. Second and third. B is the correct answer. Why, Vikram? We have to choose the incorrect statement. So second and third both are the wrong statements. So B is the correct answer. Clear? Done. Now next. Which of the following securities are not eligible in RBI retail direct scheme? Treasury bill, central government securities, corporate bonds or sovereign gold bonds, which are not eligible in the RBI direct retail schemes. Everyone, please answer. Which of the following are not eligible in the RBI direct retail scheme? Everyone, please answer. Yes. RBI retail direct scheme. Treasury bills are allowed. Central government securities are allowed. Sovereign gold spot are allowed. State development loans are allowed, but not the corporate bond. It can be state development loans. It can be central government securities. It can be the treasury bill. It can be the sovereign government bond, but it cannot be the corporate bond, right? So C is the correct answer. Done. Now, next, which of the following is not an enforcement authority for FEMA, Foreign Exchange Management Act? Which of the following is not an enforcement agency for FEMA? Everyone, not an enforcement agency for FEMA. Everyone, not an enforcement authority for FEMA, RBI, Enforcement Directorate, Ministry of Commerce, or Ministry of Finance. Everyone, you have to answer this question. Everyone. So, first of all, when we are talking about the not an enforcement authority, Reserve Bank of India is an enforcement authority. Enforcement Directorate is an enforcement authority. Ministry of Finance, yes, it is an enforcement authority, but not the Ministry of Commerce. So C is the correct answer. But not the Ministry of Commerce. So C is the correct answer. Done. Next. Choose the correct statements here. Okay, first, London Interbank Offered Rate or LIBOR was a very popular benchmark and was issued for dollar, pound, Canadian dollar and Japanese yen only. These rates are being calculated and published each day by IMF International Monetary Fund. It is served in 7 different maturity: overnight, 1 week, 1, 2, 3, 6, and 12 months. Okay, so now you have to correct me. You have to just choose the correct statement here. You have to choose the correct statement here. Everyone. Just choose the correct statement here, everyone. Okay, so first of all, let's talk about the first. London Interbank Offered Rate or LIBOR was a very popular benchmark and was issued for dollar, pound, Canadian dollar, and Japanese yen only. That are wrong statement. That is a wrong statement. If we talk about the five currencies for LIBOR, it is franc, euro, pound, yen, and dollar. Right? So these are the five currency. Again, listen, franc, euro, pound, yen, and dollar. Second, this rate is calculated and published by IMF. No, this rate is calculated and published by IBA, Indian Banking Association, right? Now, it is served in seven different maturities. Now, what are these seven different maturities? Okay, overnight, then 1 week, then 1 year, 2 year, 3 year, 6 years, oh sorry, 1 month, 2 months, 3 months, 6 month, and 12 month. So that is correct. Only third is correct. First and second are incorrect. We have to choose the correct statement. So yes, A is the correct answer. Everyone. No, 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 no. Libor was not calculated by RBI. It is calculated by IBA. It is calculated by whom? It is calculated by IBA, ICE Benchmark Administration, not Indian Bank Authority. It is ICE Benchmark Association. Okay. Now, next, how many member countries are there in the Asian Clearing Union? How many member countries are there in the Asian Clearing Union? Everyone. How many member countries are there in the Asian Clearing Union? Please answer. How many member countries are there in the Asian Clearing Union? 7, 8, 9, or 10? Member countries in the Asian Clearing Union. Everyone. Please answer. So when we are talking about the member countries in the Asian Clearing Union, we have the nine member countries in the Asian Clearing Union. And what are these nine member countries? Bangladesh, Bhutan, India, Iran, Maldives, Myanmar, Nepal, Pakistan, and Sri Lanka. These are the nine countries of Asian Clearing Union. Again, Bangladesh, Bhutan, India, Iran, Maldives, Myanmar, Nepal, Pakistan, and Sri Lanka. Right? So, ninth is the correct answer. C is the correct answer. Yeah. Next question. Which of the following categories of the merchant banker can handle issue management? Which of the following categories of the merchant banker can handle issue management? Category 1, category 2nd, category 3rd, or category 4? Everyone, please answer this question. Everyone, you can all answer this question, guys. Okay, so which of the following categories of the merchant bankers can handle issue management? Okay, so when we are talking about this thing, it is category 1. Category 1 can handle as the issue managers, right? So A is the correct answer. Done. Next, a derivative is a financial instrument. First of all, whose values changes in response to the change in the specified interest rate, security price, commodity price, foreign exchange rate, index of price or rate, a credit rating or credit index, which are called as the underlying. Second, that requires initial high investment and that is settled at a future date. Now you have to choose the correct statement here. Very simple. You have to choose the correct statement here. Very simple, easy question. You have to choose the correct statement here, everyone. Just please answer this question. Okay, so derivative, first of all, whose values change in response to the underlying asset, that is correct. That requires high initial net investments, no. That require no or very less initial investment. That is settled at a future date, correct. So A and C, these are the correct answer, right? So A and C, C is the correct answer, everyone. Done? Clear? Now, next, what is the minimum capital requirement for a merchant banker? Everyone, minimum capital requirement for a merchant banker 10 crore, 5 crore, 50 lakhs, or 10 lakhs. Minimum capital requirement for a merchant banker. Everyone, please answer. Minimum capital requirement for a merchant banker. Everyone, you can all answer this question. Minimum capital requirement for a merchant banker. So when we are talking about the minimum capital requirement, it is rupees 5 crore. 5 crore is the minimum capital requirement for a merchant banker. Next, we have to choose the correct statement here. The key feature of the exchange rate derivative contract is the non-standardization of the contract. The OTC derivative contract are standardized and the OTC market have a high level of regulation than exchange traded market. So we have to choose the correct statement, everyone. Just please choose the correct statement, everyone. The key feature of the exchange traded derivative contract is the non-standardization of the contract. The OTC derivative contract are standardized and OTC market have a high level of regulation than exchange traded market. Everyone please answer. So the correct answer is what? We have to choose the correct statement here. We have to choose the correct statement here. So first, the key feature is non-standardization. No, exchange trade derivative are the standardized form of contract. Whereas over the counter, they are non-standardized. Okay. Over the counter market at high level of regulation than exchange trade derivative. No, they have actually low level of regulation. We have to choose the correct statement. None of the above are the correct answer. None of these statements are correct. Everyone. Clear? Next question. We have to choose the correct statement regarding the call and put option. First, a call option gives the holder the obligation to sell a stock at a specific price. A put option gives the holder the obligation to buy the stock at a specific price. A call option gives the holder the right to buy a stock at a specific price, and the put option is for selling the stock at a specific price. We have to choose the correct statement here, everyone. Now choose the correct statement here, everyone. The correct answer is what? Okay. So call is for buying a stock at a specific price, and put option is for selling the stock at a specific price. So obviously third and fourth are the correct answer. First and second, these are the wrong statement, right? So D is the correct answer, everyone. 5 crore. So this was actually the answer we have already discussed, right? Now, next, we have to choose the correct statement here. Non-recourse factoring. In this type of factoring, the factor does not take the risk of the default. If the debtor fails to repay the invoice, the liability falls on the business firm itself. Recourse factoring. The liability of bad debt remains with the factor. They cannot reclaim the money from the business in the case of the debtor default. Now you have to choose the correct statement here. Now we have to choose the correct statement here, everyone. A very easy question. We have to choose the correct statement here, everyone. Non-recourse and recourse factoring. Very simple question. Non-recourse and recourse factoring. And I have already explained to you all this, everyone. I have already explained this. So, you have to choose the correct statement, Vikram. Non-recourse factoring is that factoring if the buyers fails to pay, okay, then the factor cannot recover the money from the seller. They have to bear the loss completely, and that is called as non-recourse. And in recourse, if the buyer fails to repay to the financial institution, or you can say to the factor, then the firm has to return the money. The liability falls on the firm then. So it is interchange. This is wrong. Okay, so this is the statement of non-recourse factoring, and this is the statement of recourse factoring. So we have to choose the correct statement. Neither one nor two is the correct answer. Clear? Done. Next. Forfeit gives an undertaking to execute a specific forfeiting transaction at a firm discount rate. What is the fee for such undertaking known as? Undertaking fee, commitment fee, blocked fee, or finance fee? Simple. Simple question, everyone. Please answer this question. Forfeiter gives an undertaking to execute a specific forfeiting transaction at a firm discount rate within a specified time. What is the fee for such undertaking known as, everyone? That is called as commitment fee. B is the correct answer. That is called as what? Commitment fee. Next question. Which committee recommended the creation of venture capital in India? Venture capital was recommended by whom? Venture capital. Venture capitals are recommended by whom? Everyone, please answer. Just give me a 1 minute. Okay. Which committee recommended the creation of venture capital in India? It was the Bhatt committee which actually recommended the creation of venture capital in India. So A is the correct answer. Done. Next. Which of the following characteristics of the venture capital funding is incorrect? Incorrect statement. These are the high risk investment made with the intention of making high profit. These investments are short term. The provider of the venture capital can participate in the management of the company. Money is generally invested by buying the equity in the startup. Incorrect statement here. Very simple question. Incorrect statement here. Now we have to choose the incorrect statement, everyone. These are high risk investment with an intention of making high profit, correct? The investment made are based on the short term goals, false. These are long term investments. So B is the incorrect statement. B is what? Incorrect statement. Okay. Next. Where is India's first international financial service center located? IFSC. Where is India's first International Financial Service Center located? IFSC. Mumbai, New Delhi, Gandhinagar, or Bangalore? India's first International Financial Service Center located. Mumbai, New Delhi, Gandhinagar, and Bangalore. So the correct answer is what, everyone? India's first International Financial Service Center located where? So yes, it is located in Gandhinagar. C is the correct answer. It is located where? It is located in Gandhinagar. Done. Next. Which type of NBFCs functions as a hosting agency for the developmental work? Asset finance company, infrastructure finance company, microfinance institution, or investment company? Type of NBFCs function as the hosting agency for the developmental work. Hosting agency for the developmental work, everyone. Hosting agency for the developmental work. It is infrastructure finance company, IFC. Infrastructure finance company. Clear? Now next. Which of the following entities are not mandated to distribute minimum of 50%, 90% of their cash flow to investors for loan repayment? Not mandated to distribute, everyone. Which of the followings are not mandated to distribute a minimum of 90% of their cash flow to the investor for a loan payment? REITs, InvITs, NBFCs, or both REITs and InvITs? Not mandated to distribute. I'm asking, not mandated to distribute. So yes, it is NBFCs. They are not mandated to distribute. Okay. In which of the following is an investment in the real estate that are least liquid? Least liquid. REITs, physical real estate, equities, and bonds. Which are least liquid? I'm asking. Least liquid. REITs are very liquid, bonds are very liquid, equity, because these are easily convertible into cash. Physical real estate, these are least liquid among all of these, right? Last question. What is the minimum amount you can invest in a REIT? Minimum amount you can invest in a REIT. This is the last question, everyone. What is the minimum amount you can invest in a REIT? So the minimum amount we can invest in a REIT is 15,000, right? So this is it, guys. This is the complete module D. So we have finished the whole module D of IEIFS, everyone. Thank you so much, everyone, for watching this video. And please, everyone, kindly share this video, like this video, and subscribe to this channel if you haven't subscribed to this channel. Thank you so much. Have a very nice day, everyone. Take care. Bye bye, guys. Bye, everyone. Take care.